So I'm going to dive into my latest thoughts on PayPal. Before I do, please click subscribe if you don't subscribe to my channel already, and check out the link you see on your screen for the top 10 stocks to buy right now from our sponsor, The Motley Fool. Clicking on that is the best way to support this work I do, so please check it out. You'll love what you see. So PayPal was one of the highest flying stocks in the middle of the pandemic era stock market boom. The stock topped out at over $300 a share at one point, and for good reason. The company believed it could scale its business to 750 million active users. It's right around 400 now. And there was really no end to the growth in sight. The growth was really impressive during the pandemic as so much more spending had to be pulled online, and PayPal was an obvious beneficiary of that. So, fast forward a few years, PayPal has kind of conceded that they are not going to hit those growth targets and are kind of doing their best to mostly maximize the user base that they already have, and they're still growing a little bit, but they're not going to get to that 750 million anytime soon. So let's just start with the first quarter results that we got earlier this year. PayPal reports its second quarter earnings on August 2nd, which is next Wednesday, as I'm writing this. Or as I'm recording this, rather. So, looking at the most recent results, the first quarter results were better than expected. PayPal's revenue was over $7 billion. Dollars. That was up 9% year over year. It generated $1 billion of free cash flow. Over the past 12 months, it's generated over $5 billion of free cash flow. So this is a very profitable business. The free cash flow margin of PayPal is about 20%. It has 433 million active accounts. That was down 2 million from the previous quarter. And the company says it's mostly from kind of purging accounts that weren't used very often and things like that. It's not very material. And the numbers back that up. Payment volume was $355 billion in the first quarter alone. That was up 12% year over year. And the number of transactions, it's not just inflation that's driving the payment volume up. The number of transactions was 5.8 billion PayPal transactions. That's up 13% year over year. So people are using PayPal more. It's a more concentrated user base. It's, mostly when you hear active accounts, we're really getting into active accounts now more so than before. PayPal's been using a lot of its money to buy back its stock, which, given the fact that it's still way under its peak, is not a big surprise. Spent $1.4 billion in the first quarter on buybacks, a little over $4 billion over the past 12 months, and it plans to spend another $4 billion this year. The biggest parts of growth right now of PayPal there's two things right now. One is Venmo, which has been a big growth driver for a long time, and growth actually accelerated in Venmo in the first quarter. And then PayPal's branded checkout, which the results so far have been really impressive. They're really leaning into creating kind of a branded PayPal checkout experience for merchants. And the research is showing that it's a very effective tool. It brings more repeat business. People are more confident in the checkout process and are more likely to just, one click checkout and not really, second guess their purchase and leave the shopping cart, if you will. So branded checkout has some good momentum going. Looking at PayPal's guidance, it's really important to emphasize what a profitable business this is. Growth kind of collapsed in several high growth tech businesses in 2022, and a lot of them weren't profitable, but PayPal is. PayPal's expecting almost $5, so $4.95 in earnings per share for the full year. That's a pretty nice multiple of about 14 times forward earnings. It's expecting margin expansion. Like I said, it's going to spend about $4 billion on buybacks. And revenue, it's expecting about 7% year over year revenue growth, which isn't bad considering the economic climate and the fact that most economists think we're heading into a recession right now. So I mentioned they report earnings on August 2nd. I'm going to be keeping a lookout for the latest numbers on Venmo and that branded checkout product. I want to see what the number of active accounts is doing, if they've returned to growth, and more buyback progress. But right now, the valuation looks very, very attractive. It's a profitable cash cow business, and it's one that it's kind of crept back to the top of my watch list, and I may add it to my portfolio once again soon. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.